You guys, you junior uranium guys, are running on vapor right now, all of you. What does a company like you, which is re-entering old mines, need to do to be able to go and talk to utility companies? How do you insert yourself into this cycle? As an ex-banker, I'm trying to understand, what do you know about what you've got today? I would be looking at those studies, those economic studies, to try and understand it. And traditionally, that's PEA, pre-feas, feasibility, definitive feasibility study. But it feels like kind of a bit like, back of an envelope, I'm going to do some quick numbers for you here. Here's what we think we can get. So can you give me some money? So you think on the basis of the old 4301, you can convince people that you know the scale of the ore available to you underground. You're saying that that's going to be good enough for financiers to say, okay, we understand how much ore they're going to be able to mine. Yeah. Hello and welcome to Crux Investor. Thank you very much for watching this video. If you like it, give us a thumbs up and do leave us your comments, because we do try to get back to absolutely everyone. And for those of you who've not already done so, could you click the subscription button in the corner of the screen? And if you want to see more videos like this, click the notification bell. Today we spoke with George Glasier. He's the CEO of Western Uranium. They're a uranium developer with assets in the US. Now, before I start, I need to apologize for the quality of the video coming in from George's side. He was speaking from his hotel suite. If it is all too much for you to watch, you can listen to it on our podcast, and we are offering a transcription as well, which you can find below the video on our website. We talked to George about a number of things, and by the way, thank you very much for everyone who sent in questions. Got 6 pages of questions actually, so we do try to get through most of those. We talk about George's recent quote with regards to the US government buying ore, and we find out what he meant by that. We talk about also some of the issues around the Colorado licensing issues that he is facing. They've got a hearing, I think 24th of April coming up, and what his hopes are for that, and indeed what happens if they do not go his way. We were quite keen to talk about his Kinetic separation technology as well, and what the commercial realities of that are. We talk also about the mill. Now, again, George has made some statements about the use of the White Mesa mill, which is Energy Fuels. And again, we talk about the commercial realities there. We do discuss a number of other topics. Take a look in the description below. It's a very fulsome, very long video. So for those of you who are into the detail, it's there for you. If there's anything in particular you want to look at the timestamps, click on the relevant one, and that'll take you to that part of the video. Anyway, let's hear what George had to say. Hello, George. How are you, sir?
Very good. Fantastic.
You're in PDAC at the moment, pounding the streets and manning the stand, are you?
Oh, that's right. I've been at PDAC for a few days. It's one of the big conferences. Of course, you've been here before, so you know.
I don't miss it, George, I have to say. It's quite a big one. There's like sort of 30,000 people. I mean, what's the turnout been like? Obviously, with this coronavirus, I've heard a few reports.
It's a bit lower. I think maybe the virus has kept a few people away. The companies are here, but maybe not quite the investor group. That's what we're seeing. We had a booth here, and not quite the traffic as in past years.
I'm hearing that resounding message. Well, George, first time I've spoken to you guys, so thank you very much for that, first of all. This is a story new to our investors, so I wonder if you can give us that 1 minute overview of the company, and then we'll pick it up from there.
Well, a quick overview of the company. Of course, we're a U.S. Resource holder with uranium and vanadium in the states of Utah and Colorado. Mines ready to go into production. The Sunday Mine Complex was opened this last summer. It's virtually ready to go. Ore was stockpiled in the mines. Last week we finished building 3 ore pads at the complex, so that we can take the ore, move it to the outside, and then truck it off site when the market is right. So we have a fairly large resource holding, 43101s or JORC standards on a number of our resources. Investors can get onto our website and look at that. So there's a quick overview of the company.
Beautiful, beautiful. Actually, you touched upon something there, which was the ore pads, because I think there was a little bit of kerfuffle in the market at the beginning of the year when I think the Colorado Department for Reclamation, Mining and Safety. We're talking to you about the licenses on all 5 mines under the Sunday Mine Complex. So what's happened with that? I know there's been a couple of press releases, but if you don't mind running us through that.
Well, if I can give you a background on what happened, this started with a mine that we own called the Van 4. The Van 4 was a mine we also acquired from Energy Fuels when we acquired the Sunday Mine Complex. And at that time, the Van 4 was in the first of a 5-year temporary cessation, which was granted by the Department of the State. So several years later, that first 5 years expired. We went in to extend it under the regulations of the state. You had 2 5-year temporary cessations, and if you didn't go into mining activities or if you didn't go into activities, then you would have to reclaim the mine. So we went in and applied for and were granted the second 5-year extension by the board. What happened, the antis sued the board, and at the district court in Colorado, the board won. The district court says you have followed your regulations, and the company, which was this case, Western, had a right to apply for and be granted a second 5-year extension. Well, the antis took that to the Colorado Court of Appeals, and the Court of Appeals reversed that decision and says, we believe that the state statute really means that you have to have physical activity. Now, the Van 4 probably wasn't operated until maybe the last operation was 2000. So clearly it didn't have physical activity, virtually anything. We did some maintenance on the surface, but we didn't do anything leading towards mining at the Van 4. So that decision, basically the district court was reversed, and with the district court ordered the board to revoke the operating license of the Van 4 and put it into reclamation. So that was done, that was about a year and a half ago. So knowing that other mines in the state of Colorado, not just the Sunday complex, are on temporary cessation, and tell me that the Sunday mine is in that same status, we basically said, okay, we're going to have physical activity. We're going to go into the mining mode. We opened the mine last summer, and we operated it. We actually produced ore because that satisfied clearly in our minds the 10-year period. The mine was last operated by Denison Mines in 2009 and 2010. And then it went into this period of temporary cessation. So we meet the physical test, okay? But again, because of the decision of the courts, the division now is looking at all mines that are in this temporary cessation status to decide if they have to, basically go into reclamation. So again, we're probably the first test case where the Sunday mine will have a hearing in April to determine what we've done and whether we're in active status. And we believe we've done everything to comply with what they say is active status. Now they're actually going through a rulemaking to determine going forward what active status means. They don't have good standards right now. Active status could be just about anything based on the current interpretation. So they are going through a rulemaking to set that down and say this is active status. And that probably won't be finished for a year. But that doesn't apply. We contend this doesn't apply to us. We can't wait a year. I mean, they're going to do the hearing now. We are active under the standards as they've applied it in the past. And we will be actively pursuing that at this hearing in April. So we believe that the mines will be declared active. Now, other mines in Colorado may not be. There's a number of them that have not been physically active, not that we own them. And those are subject potentially to the same treatment of the, the Van 4.
Right. Okay. So you're claiming you're active because you're physically doing things in and around the mine and underground in terms of stockpiling ore.
We were prepared to take the mines out and ship ore. What happened is we were just going to take it directly from the loaders, put it into the trucks, and haul it off site. Well, the mine permit basically said before you take ore out of the mines, you have to have ore pads, even if you don't use them. So they said, don't take the ore out until you build the ore pads. So that was
you've just done.
So we are now prepared to take ore out. But again, we've complied with their requirements, right, to the letter of
well, let's finish off on those, George. I mean, they asked you to do a couple of other things, and I noticed in the press release you say you have done those things. Run through what you have done, what you spent money on.
What we had to do, there were 3 things requirements. One, they required us to cover the low-grade stockpile, and that was done even before we opened the mine. So we did that, and they signed off on it. A great job. We opened the mine. We were mining ore, and they said, there's 2 other things we want you to do. We want you to, well, the upgrading of the storm drainage system, which there was already a storm drainage system there, but it needed some upgrading and some repairs. So that was one of the requirements. We finished that about 2 months ago and announced that, and they signed off on that. And the third requirement was the construction of the ore pads to the design that was already approved. So that was done by an independent contractor, certified by an independent engineer. That report was submitted last week to the state, and they should sign off on that shortly and say, fine, the ore pads are constructed according to the design that's been approved in the permit.
Right, so that answers the questions which they raised last September to you. So you spent time when you received that letter in September through till recently getting that done.
Right, and clearly what we did first, we did the storm drainage. That took a while, and then you couldn't, under the license or the permit procedure, you couldn't build the ore pads if there were too much moisture or the ground was frozen. So we were basically waiting for the right conditions, weather conditions, which we had this February to construct those ore pads. That's why we didn't do that first, simply because we didn't have the right conditions. But now that is all finished.
Okay, so you feel you have done what they've asked. You're walking, or confidently walking, into this meeting in April, expecting to be able to argue the case that you are an active mine again on that basis, yeah? Okay. Now, you mentioned a phrase there, antis. What do you mean antis? These are people who are anti-mining in Colorado. What are they doing?
Yeah, we're actively mining, and we're removing ore. We put ore in the mine, and we stockpiled it in the mine because they wouldn't let us take it out. So there was actually ore that was mined, stockpiled in the mine, waiting for the conditions to be satisfied. So we've done a lot of things. We went in there, we did drilling, we did all kinds of activities, but we actually mined ore. If that's not active, I'm not sure any mine would ever be active.
Right. No, so I wasn't saying active. I was referring to a phrase you used earlier, which is the antis have been petitioning and affecting the behavior of the Colorado mining the division. So, are you being affected by these anti-mining petitions? Is that what you were talking about?
Well, there'll be probably somebody at that hearing that's, contests whether we were active. That's the point. And I'm not sure what their arguments will be under the existing rules and the way they've administered those. We're active. I'm not sure what their argument would be. They may say, well, wait till the new rules come out. But we're basically saying you have to operate under your existing rules, and this is a hearing before the new rules, if whatever they are out. So again, we believe the new rules also will be pretty broad. There'll be a number of activities that constitute active mining, not just mining ore. Because when you're developing a mine, when you're doing that, that's certainly active. And that's why I think they have to have a broad definition, and we'll see what comes out. And that's what they've had in the past.
Right. Okay. So they're anti-mining, but they're using the argument that you have been inactive for that 10-year period. Therefore, that's where they're hanging their coat on, right?
When Energy Fuels bought the mine, they actually put in monitor wells. All right. And so there was activity there. It didn't produce any ore, but they did things there more than just maintaining. And that's the other argument. And that was done in 2012 and 2013 after Energy Fuels acquired the mines from Denison. So there was activity during that 10-year period, and certainly activity, during 2019.
Okay, you're feeling confident. You will continue to spend money between now and that hearing in April, keeping the mine active. So what are the things that you're going to be doing between now and then, and how much are you going to be spending doing those things?
Again, we're probably already active without taking that ore and putting it on the ore pad. But again, that may be something we do, open up the mines and take the ore out and put it on the ore pad. We do have some places that we could ship samples of that ore. If you'll recall, one of the reasons we opened this mine was because of the very high grade vanadium. Vanadium prices, a year and a half ago were sky high. So we had planned to do this and pull samples of that very high grade vanadium ore to ship to various potential processing plants. Well, as you know, the vanadium price has fallen considerably, and there's still a few of them that say ship us samples, but with these conditions, there's not quite the demand for vanadium. But we're assessing what to do: ship the samples, take a little bit of ore out, ship the samples off-site. But right now, as you know, there's really no place to go. The uranium price is not high enough, and probably the vanadium price is not to justify shipping the ore to a processing plant, either in the U.S. or offshore.
Well, explain something to me, George, because and I just want to understand a process, because we've not talked to many companies who've gone into formally producing mines and started them up. So just help me. So what studies have you done? You've got a PEA?
We basically opened the mine because we knew what was in there, and we wanted to confirm what was in the mine. That's why we opened it this summer, and we spent three and a half months in there, with our geologist, with our production people, assessing the mine and saying, okay, this mine is ready for production. A little bit of repair work was done, but it mostly was, some development, drilling, removing waste, and or production.
So, all right. So, tell me what do you now know about the mine? So, obviously, there's a 43101 which exists, which tells you, some, I guess, some information. There's some historic data too. But what do you know today about what you've got under the ground?
Of course, the 43101 that was done on the Sunday Mine Complex was done on a small drill out that Denison Mines completed back in 2009, just to determine, if a small drill out. So most of the Sunday Mine Complex has never been explored. And so that 43101, which you can basically see on our website, it shows that there's about 3 million pounds of uranium in that small drill out. Well, that's why we knew that, based on the historic operation, that when Union Carbide started this mine, they basically bypassed and did not take all the high-grade vanadium ore where the grades of the uranium were lower. And that's what we went in primarily, because that is not part of the 43101. That was not even assessed when Denison did it, because it was lower grade uranium but very high grade vanadium. And we reported that on press releases, and the market can go look at that. But the grades of vanadium are very high, and that is the first ore we would start to mine. And it's still got uranium, but it's not as high grade as the drill out and the potential for the rest of the.
So let's come back to these studies. So just to understand the process, because I'm learning here. So the 43101 is old. It's 2009. Would you look to upgrade that, or would you move straight to PEA, or what is the sequence of events that you think you've got to go through?
Obviously, we could obviously do a PEA on that particular drill out. We could do a PEA now that we've opened the mine. We could do a PEA on the ore that is not that was not included in that 43101. So the big issue is, okay, where are we going to process it? Mining costs are pretty simple. We could go through a PEA and tell you what it costs to pull the ore out of that mine. The issue is, you're probably going to ask me, is where we're going to process, okay, and what is the processing cost? So there's really no way to complete a PEA and say we can get yellow cake in the can at X price, because it's unknown. First of all, the only processing plant that's really available is the Energy Fuels plant. It's shut down now. Is it going to start up? Is there going to be other ones starting up? What's going to be the status? So if you did a PEA trying to do it on the full production cost, you would be stuck with the unknown of the processing plant. I wasn't really coming at it from. Yeah, eventually we would have got on to asking about, where do you process it and so forth. And I think, that's a topic worth discussing. But just coming back to the study component, like as an ex-banker, I'm trying to understand, what do we know about, what do you know about what you've got today, which would allow me, if I was financing this thing, to be able to get it financed. So, and usually I'm, conventional banker, I would be looking at those studies, those economic studies, to try and understand it. And traditionally, that's PEA, pre-feas, feasibility, definitive feasibility study. But you're re-entering an old mine, and I just want to know what's going on in your head, because you've got a plan here. Clearly, you've been doing this a long time. I just want you to kind of share with me or all these viewers, what is that go forward plan if someone
like me in my old profession of banking, doesn't have a measure by which I can say, hey, George, I totally get what you're doing. Here's the money. So, what is the go forward plan to get funding?
Okay, well, this is a simple mine. We opened the mine with the same contractor that Denison had in there when Denison was producing. And that contractor was charging Denison so much per ton to take the ore and put it outside the mine. And of course, then you had to haul it to the mill, and Denison was hauling it to the White Mesa mill and processing. So the contractor cost, and while we weren't producing ore, we were paying the contractor a fixed fee each month because we were doing a lot more than just producing ore. But if he goes into the ore production stage of this thing and he's producing ore, then there'll be a cost per ton. Okay, and that basically is almost our full cost. There's some administrative costs. There are a few of the supplies that we put into the mine, roof bolts, matting, things like that. So then we take that per ton cost of production, add the cost that we will pay, and we've got a cost per ton of putting that ore outside of the mine. And that ore will have a certain amount of uranium and a certain amount of vanadium. Okay, so the content, the mineral content of that ore will give you the value that you have in a ton of rock. And we know the cost of that. Now, we know that if we transport it to the White Mesa mill, we know how far it is. We can get a bid from a trucker and tell you how much it costs to truck it there, which we already have pretty much that knowledge. So then we have to say, okay, what's the arrangement to process at the White Mesa mill? And of course, you've interviewed Mark and talked to Mark Chalmers. And again, that White Mesa mill is ready to go, with ore, but it doesn't have enough ore. There's no doubt about it.
It's a big mill. It's a big mill.
I was with the company that built that mill. And when we started that mill, we had 1 million tons of ore stockpiled at the site. That processing plant takes at least 700,000 tons of ore a year. And so they don't have the capacity to produce that in their current developed and permitted mines. So what's Mark going to do? And again, he hesitates to say because I don't think his plans are firm. But again, I think what he's going to do is say, I'll take ore from the independents, the other companies, because that helps them. It helps the independents. It helps us. But it certainly gives him cash flow to fill up that mill. That mill is costing them a lot of money to sit there. And I'll tell you, I think for the good of their shareholders, and I'm still a shareholder of Energy Fuels, they need to put that mill into full operation as soon as they can. And again, it's going to be dependent on the price of both uranium and vanadium, but maybe that's coming soon with the action of the U.S. government. So, that's going to be the key to determining the total cost and the value of the Sunday mine ore coming out of there is what kind of transaction can we make with Energy Fuels. And that's the short term.
Okay. So I hear you on that one. I bet I go. Just let me come back. I want to do these steps to try to really make sure I get it. Okay. So just coming back to how you guys get funding. Like I think in September you had $2.7 million you're spending, or thereabouts. You're spending, I don't know. You were spending 750 per quarter up until then. So how much money have you got today? And when are you going to need to go out and raise some capital? And I don't.
About US $1.5 million in the bank.
Okay.
You can see our burn rate without operating the mines is a little over 100,000 a month. So that's we don't need money right now. Now, if we open up the mine again, that takes cash. Obviously, we spent cash last summer with the contractor and that. We spent about $100,000 on those ore pads, and we had a contractor build those, and those are now complete. Now we've got some cost, that we're going to, a small amount of cost, we're going to, basically contest, or we're going to go into the state with all of our guns to say this is an active mine. We've got a top litigating attorney on our side, plus we've got the consultants. That costs a little bit. So we are spending a little bit outside of our normal expenditures of holding properties and the general and administrative. So, but unless we start operating the mines, we won't need additional cash for some time. Now, if the market turns, all of a sudden we're going to open those mines. It's going to take some cash.
Right. Okay. So you're moving forward, but trying to conserve your money. I appreciate lawyers and so forth, and this hearing in April is going to take a lot of time, effort, and a bit more money. But if it's found in your favor, you would then look to move to properly being active and opening up the mine. Is that that's what you're telling me?
We could get that kind of ruling soon, or it could be maybe when the government starts buying after the new budget comes out. You've read the same thing, same thing. So it's uncertain when something will happen, but it could happen very soon, or it could be a little bit longer. But apparently, President Trump has something in mind to help the U.S. industry, and we're prepared. That's why we've got those mines ready to go, so that we can be one of the suppliers to whatever need is out there.
Okay, you're taking care of business as far as the administrative side of things. You got to get the permissions to be able to get back in there. Okay, so let's kind of park that if we make, and I just need to get this answer to the original question, which was, how does a company at your stage, without going through the process of economic studies, get finance? So when you're ready to switch on, who's gonna step in and finance you too, even if it's for $5 million, not necessarily to get into production, clearly, but to allow you to get things set up and ready to put yourself in the best position to get into production, should the government ever give clarity on what's happening on with their uranium and nuclear plans.
It doesn't cost anything really to get the mine going. We'll have to turn the meters back on, the electric meters, deposits of about $20,000. But again, it's not much. So again, when we start to turn the mine on for production, we'll have some kind of offtake contract at a price, and we'll basically debt finance that possibly, whether we'll do a placement, an equity placement. But again, we'll have the economics laid out, because we'll know what we're going to do with the ore. We'll know what the price is. Now, Energy Fuels has talked, to the market, just told me at their booth today they want $60 to $65.
Yeah,
that's a pretty nice price. The Sunday mine certainly can make money at that price. Now, is the government going to step up and buy at 60 or 65? We don't know. But if they do, you can apply the economics, and so can we, and so can an outside financial firm or investors, to give us the money, which is not a lot of money. Depends on what kind of arrangement we have with the mill. If it's simply, as Mark Chalmers has said, they might just buy ore. In the first Energy Fuels, which I was part of, we bought a lot of ore from the independents. You would ship a truckload of ore, you get paid 30 days down the road. So that is not much financing for that, because you just have to mine each day and ship ore, and then you get paid.
So you think on the basis of the old 4301, you can convince people that the scale of the ore available to you underground? You're saying that's going to be good enough for financiers to say, okay, we understand how much ore they're going to be able to mine. Yeah.
Oh, of course. In fact, we can open up the mine and take them in and show them. That's one thing. They can go right in there, and they can talk to the geologists, and what we did, the development drilling we did, so they can see what. And obviously, we're not going to go into full production to start with. If the government decides to buy a couple million pounds, that's going to be split, spread across a number of producers. So, we could probably produce half of that the first year, but we're not going to. I don't think we're going to get that much. So we're going to go into some limited production to start with, because I don't think if that's the program we're counting on, it's $150 million. That only buys you about 2 million pounds. So that's not a lot of uranium. We could easily produce, a third or a fourth of that.
How much equipment and how much did you inherit when you bought the mine? I mean, are you going to have to go out and buy a whole spend a bunch of money on the OPEX and the CAPEX here?
We'll use the contractor. He's already available to us. The contractor has all the equipment, so we don't buy anything. We've got a little bit of mining equipment ourselves, but he will bring the equipment. He was mining for Denison, and he's sitting there with nothing to do. He's already committed to do the mine for us. So, there is no capital cost in the way of equipment.
Okay. You need a good idea of what you're going to be able to sell at to be able to work out what the contract looks like with him, because you obviously got to make a margin, right? Otherwise, he takes it all potentially. What do you think your number needs to be? You saying 60, 65 as well?
I think the Sunday mine, certainly, if you've got $60, $65 uranium and even current prices of vanadium, it makes sense at that, maybe even a lower price. the Sunday mine has got very high-grade vanadium. It's probably the best vanadium mine in North America, maybe in the world. It's got 2 or 3% vanadium, and the White Mesa Mill recovers vanadium. So it's got that additional value that drives the cost of uranium down. I'm not going to give you a number yet, but again, I'd like to see if Energy Fuels can do 60 or 65, that might set the market. Why would I want to sell at 40 if the market, if their production, which they're going to be the biggest producer into this, there's no doubt about it, and they're going to set the price. And they make no, it's no secret. They want $60 or $65. That's what the U.S. needs to survive.
So you think
some people say it's less, but you really need a price that can keep this industry alive.
But you're talking about a bifurcated market there, where the U.S. is selling at one price and the rest of the world selling at another, right? You think that's realistic?
Yes, I think so. We're waiting to see what the government program is, if that's the program we're going to produce into. And nobody knows. I've even made a suggestion that they could simply stockpile ore. They don't need to process it. The government would be better off buying raw ore, stockpiling it. The government doesn't need yellow cake. It's easy to turn the ore into yellow cake. You just have to have a mill. If there was an emergency where the U.S. needed it, they could do that and have a new mill built within a year. The U.S. government could do things like that. So maybe they should stockpile both U308 as well as ore, and they could get a lot more for their money by stockpiling ore.
Well, you did. I heard an interview you did with Scott at Proactive. We suggested that that's what the U.S. government might do is start stockpiling ore. I mean, I assume you did mean ore and not yellow cake. Why would you, just to help me understand? So why would the government take the risk on the recovery component? Do you think it's just all about security, so therefore it's irrelevant what the delta on the risk is, or why would they do that?
Risk is, if the government said we've got to process ore, they could turn around and build a processing plant, or get Energy Fuels to process it. It's not the issue they have to have yellow cake in the can. We're not out of uranium in the U.S. The problem is the mines are going to shut down if we don't get some relief. And if the mines shut down, then it's going to take years and huge amounts of money to bring them back. So what they're going to do is they're going to invest now to keep the mining possibility there. The processing plants, you can build a new processing plant. That's just a structure with tanks and pumps and things like that. Obviously you've got to get permits, but the U.S. government, they declared an emergency. They would just do it. We've done that before, in emergency. So, I'm not saying they would buy just ore, but it could be a combination, stockpiling ore as well as buying the yellow cake. But they could get a lot more for their money right now, obviously, than when they need it, spend the money down the road. And that way you've given the miners what they need. You've acquired the ore to turn it into yellow cake when you need it, but you haven't spent the full cost of acquiring yellow cake.
Okay, but I agree that it potentially could be a saving if they're prepared to take the risk on the recovery for it. So I think there's something there. But you don't know anything that we don't with regards to the government's plan to buy ore versus U308.
I don't know anything. It's just a possibility. Okay. Nobody knows anything about what the plan will be. And the first thing is there's only a proposed budget. There's no real dollars there yet. If there's real dollars, then one of the agencies, maybe the Department of Energy, will set out the program. Of course, the Department of Energy in the past bought all of the uranium for the U.S. That's how they got it. They were good at it in the past. They haven't done it for a long time, but it wouldn't take long for the Department of Energy to develop a program to buy this material in whatever form it is. But they've got to have basically the money to do that, to say, okay, we've got the $150 million or whatever. Right now it's a proposed budget and there's no cash there for the department to do it.
Yeah, it's quite vague at the moment, and I'm looking forward to hopefully this week's announcement from the Department of Energy. But can I talk about two more things? You mentioned one of them, which is the mill. You talked about doing deals there, which obviously makes sense. So where are you in that discussion? Have you had discussions with, you've mentioned Energy Fuels, who we have spoken to. Are there others who you've spoken to? I mean, how do you process what you've got, I guess? And I know you said you're not quite sure what the cost will be, but how do you go about finding out?
We're constantly talking with Energy Fuels, some here at PDAC. And again, I think once their plans firm up, then they can talk to us seriously about what they can do with our ore. But again, they're in the same position. They don't have a contract. They don't have an offtake. So that mill is sitting there virtually ready to go, but without any ore to fill. And they produced a little. They announced out of their LaSalle project, I think they moved 6,000 or 8,000 tons. That's a few days of processing. They're not going to start that mill and run it for that period of time. They need to run that mill for a period of time. It's expensive to start up and shut down. So what happens, they're going to have their plan. They're going to wait until they get their contract, an offtake, I suppose. That would be the logical thing to do. They're going to be one of the suppliers if the government buys, or if the government does something else under whatever might be announced in the next few days. I don't know what that is. If they're going to announce they've got current funds to do something, maybe they do. They can pull it from other budgets. So maybe they could do something and say we're going to contract for deliveries right away. Who knows what they're going to do? The working group had a lot of suggestions, a lot of recommendations. We haven't seen that yet, but when that's made public, those are the suggestions as to how to save this industry that went to the president. But we speculate. We know by rumor what might be in there, but we don't know for sure. And which ones of those many recommendations are they going to initiate? We don't know. Nobody knows.
Yeah, I agree with you. I don't think anyone knows, and the language has been beautifully politic and unclear. But coming back to the mill component, I get that both sides are going to have a different view of this one. You're of the view, I've got ore, you've got a mill which is underutilized, I can supply it into you, or not, because you have other options. Are there other options in the US? Where do you ship it to, for instance? I mean, there's a couple of other mills, I think.
Other options, obviously, there are a couple other mills in the United States. They're not in the same condition. There's the Rio Tinto mill in Wyoming, and there's the shooting mill in Utah, which neither one of them are quite ready for production, but could be. When you take a look at it, and if Energy Fuels wouldn't take ore from the other, and there's not just Western, there's other companies that can produce ore. So what the other companies could do, Enfield owns the mill at Shooting, and I know they've got some mines that they want to put into production. So there are other options, and I think that the quickest and the least costly is Energy Fuels. Right. But if they say no, we're not going to process anybody else's ore, then if the economics are right, it will be done. It's
going to come down to, do both sides make money, clearly? And so you have spoken with them this week at PDAC. It's probably too early to have discussions until you know what's happening with the Nuclear Fuel Working Group anyway, but you think that they're open to doing a deal with you if both sides can get the economics agreed?
I think if the right deal comes down, I think it's good for both Western and Energy Fuels to make some kind of arrangement, whether it's selling them more or whether it's toll milling. I think it makes sense from both companies' standpoint economically to do something. Right. Because you've got to take advantage of the price when it's there. And Energy Fuels, if they're going to bid on, 1.5 million pounds, they're going to have to deliver it fairly soon. And where are they going to get it? They don't have that production capacity right now. Now, given time, they can bring other projects on, and they just updated their PEA on the Sheep Mountain, as you see. But Sheep Mountain's in Wyoming, and it's almost fully permitted. Maybe it's fully permitted, but it's not ready for production. And I see the market cap to bring that in production is like $150 million. You don't bring that on if you got a contract, for 1 million pounds. You do things that are right now, and you buy ore or you let others process at the mill, and you make money off of that. Energy Fuels can make a nice profit off of buying ore or toll milling. There's no doubt about it. We did it in the past. Denison was buying ore when they were running the mill because they couldn't fill it with their own. So It just makes economic sense to open that mill to other people But Energy Fuels makes money and everybody else does. And if Energy Fuels believes that they don't want anybody else to make money, it's hurting their shareholders as much as it's hurting mine or Enfields or anybody else's. So, you know, at some point, you got to look after the shareholders. That's the key. You know, don't worry about the competition. There's really not a competition in this industry. We all need about the same price. We all produce the same product. It's not like we're trying to, you know, compete. There's no market for any of us now. You know, $25, nobody's selling uranium. So I don't think we're competing against each other. Even we're not competing against the world, except the fact is we're not selling uranium at $25 as the Kazakhs are. And, you know, you take a look at Cameco. Cameco is not selling uranium at $25. So, you know, we don't have to worry about the competition. We have to worry about the world market. The competition now is the Russians or the Kazakhs that are keeping that price down, and the oversupply of the market. You know, that's got to work itself out, and then the price will go up. I think the government action, no matter what the U.S. government does, it's only temporary. We've got to have a world price that supports mining around the world, in Canada and Australia, the U.S.
Yeah, I agree with that. I think your competition in the US is also natural gas, not just other uranium peer groups. Can we talk about, like, thanks for that. Like, I guess there's a whole bunch of unknowns in there. You're saying to me, just finish off that, if you can't get to an agreement with Energy Fuels, you've got options, you feel, right? And you feel that the market is going to need to see a price of $60-65 in the US for people to be encouraged and incentivized to get back into production. If the market takes time to recover, that whether it be spot price getting up to whatever it needs to do, or your ability to put contracts in place, obviously, which typically get a slightly higher price than spot. Actually, we haven't really talked about that, have we? You know, what does a company like you, which is re-entering old mines, need to do to be able to go and talk to utility companies? Because I think you mentioned one agreement from 2015 with a utility company. Is that still in existence? What is that? What's
contract still in existence, and we have not delivered against it. You know, because they've deferred the delivery simply because we said, hey, at these prices, we're not going to open the mine. We could go out and buy the uranium, but there would be probably very little margin, if any, in it. So they've agreed they didn't need the uranium. They contracted with us for small quantities, and, you know, we can't give you the details of the contract. It's confidential. But we haven't delivered into it, or you would see it in our financial statements. And again, under the current market conditions, they're probably out buying in the spot market. You know, there's a lot of uranium, so they don't need that uranium we contracted for. So again, we're not signing new contracts. We're not even looking at new contracts because the U.S. utilities are not prepared to pay the higher price. And I understand where they're coming from. You know, when you can buy at $25, why sign a $60 contract? So again, I think long-term contracting will come, but we're going to have to see that price move up. What is the, you know, term prices maybe in the low 30s now, but that's still not enough for U.S. producers to sign term contracts.
40s, I'm hearing 40s. That's the rumor. Who knows? Okay, so like you're early stage, right? You're really kind of early days here. You're not in a position to be talking about signing contracts, even if the price was 60 today, are you? You've got to move this project into, you know, further along here. You've got to work out how much you can actually mine and get to surface first. So that's the process you're going through at the moment. Is that correct?
Right. And until we have the economics there, you know, there's no reason to talk to the utilities. I mean, at this point, you know, we talk to them, we talk to the buyers, but again, the time is not right. You know, the prices are not high, and maybe they won't be in the next 2 years, but eventually they will be. If you look at all the analysts out there, they said there's going to be a crossover between the supply and demand. When that happens, you're going to see uranium prices go up. How much they go up depends on, you know, but the longer we wait, the higher that price is going to go because nobody's doing anything. Nobody can get any money. You know, I've been here, talked to all the uranium companies, juniors right here at this conference, and everybody is just holding on. They're getting enough money, raising enough money to keep their assets, but they're not developing. There's not much exploration going on. I mean, it's just holding. The exploration is going on a little bit in Canada, obviously. You know, in Athabasca, they're still doing exploration because they've got special tax laws up here in Canada where they can get this flow through money. And we don't have that in the U.S. I mean, so we're at a disadvantage, but we don't need to explore. We've got plenty of resources already, defined in the U.S. So why explore? But without companies developing, take a look. If you want to develop the Sheep Mountain, just look at their PEA, 150 million. Energy Fuels is not going to spend that unless they've got a contract and an assurance they're going to make money on that. And so nothing is happening.
No, I agree. I agree with you. I kind of like that. I like this bit of the discussion because you're being realistic and saying, look, potentially, if the US government don't actually firm up on exactly what they're going to do for us, this industry, this uranium industry, as part of the bigger nuclear picture, if they don't firm up on that and give us the prices towards the 60, 65, maybe there'll be price discovery in the market, and maybe it doesn't matter, but it's going to take a couple of years for that process to run its course. You guys, you junior uranium guys, are running on vapor right now, all of you, because there's no revenues, obviously. But hunkering down is the smartest thing to do. That's what you're telling me, right?
Yeah, well, that's right. And I think the companies will hold on. They'll have to cut their costs, just like Energy Fuels had a fairly major layoff, 60 days ago. Yeah. So they took some steps to cut the cost. Companies are cutting their costs. They're trying to live off of their revenue or the investments they can get. But maybe they can last 2 years, but everybody's going to have to cut back. Right now, there wasn't much interest in the uranium sector at this conference. Gold. That was the big thing. But, if you went out to raise money, there have been some small capital raises by the small companies, but nothing major. So again, this industry is holding on barely, not just in the U.S., but around the world. And so again, we need to have a higher world price. And that will come. Now, whether it goes to $60, I don't know. It depends on where the production comes in to fill the demand and at what price. And again, Cameco, probably the best producer in the world, is going to take a majority of the contracts at whatever price they're willing to do. And then the next tier of production will come in, whether some in Australia, some in the US. But again, if the Kazakhs and the Russians can put uranium into the market at $25 for the next 20 years, it's going to stay at $25.
No, I don't believe they want to do that either. Why? Can you tell me, where do you think you get into this cycle? How do you insert yourself into this cycle? Because, like I say, you've talked in other interviews about being able to get ore to surface, and let's assume you can come up with some production agreement with Energy Fuels or AN or other. You think you can get into production quite soon, and you're telling me in this interview you think that you can put the numbers together in a way. It feels like kind of a bit like back of an envelope. I'm going to do some quick numbers for you here. Here's what we think we can get. So can you give me some money? It's simpler. It's simpler. Is that what you're telling me?
Our mine is a two commodity mine, uranium and vanadium. So it's not just dependent on uranium. You get the vanadium price up into the $8 to $10, then we've got a vanadium mine. So again, we're not totally dependent on the price of uranium, unlike virtually everybody else. Now, Energy Fuels has some uranium and vanadium, but take a look at the rest of the United States, the rest of the world, they're dependent on uranium. Maybe a few that have a little bit of vanadium, but not high-grade vanadium. So we basically could be driven by the vanadium market, which is a spot market, not a long-term market. We met with some of the analysts that cover some of the vanadium and do some of the reports and get some idea what they think is going to happen with vanadium. So again, we got to be ready. Maybe it's not uranium. Maybe we turn this mine on to produce vanadium.
But vanadium's been traditionally quite volatile. I know it's 90% in the steel industry, and people talking about VRFB batteries, and it's coming. But we saw the spike 18 months ago, back down to $3. Where is it? $7 today. it bounces around and it has been volatile. I mean, can you base a business solely off of that, really, even with high grade?
Well, again, since we don't have a large capital cost, if we basically said, okay, we could sell forward even for 6 months or so, we could start to mine. Obviously, you got to process it. There's processing plants offshore that can handle this. Okay, and that's when the uranium or the vanadium price went up. That's why they all came to us. We could get them high-grade vanadium ore to be processed offshore. Of course, that was when the price was $20 or higher. Now, if it doesn't go way up, maybe that's still not an option. Maybe, but we're always talking to people. There's a possibility of building a vanadium processing plant in the United States that recovers vanadium from these ores.
Do you know what the scale of the operation could be? I mean, how much ore vanadium have you got?
Well, again, if you take a look at the small drill out that was done, the resource of uranium, the vanadium resources is based on the historic ratio of uranium to vanadium in the Sunday mine, which is about 6-1. So, I mean, if you got 3 million pounds of uranium, you got 18 million pounds of vanadium, but that's based on, but again, we went in and when we looked at the mine, the vanadium is actually higher than the 6-1 that Union Carbide historically produced. But again, we don't report that. We just use that historic, which, we have to be careful what we report to the market. Bear in mind, we are also an SEC reporting company, not just in Canada. The Canadian rules are a little looser. The US rules are very tight. And so what we report in the way of resources and that have to be qualified. And that question came up. You see in our presentation, we call these historic resources, even though they're compliant with Canadian and Australian standards. In the US, you can't say that. So again, we call them historic because apparently that's what the US security laws require.
Understand.
So again, I can't tell you that there's 100 million pounds in the Sunday mine, but a lot of that mine hasn't been mined and it hasn't been explored. And again, how many pounds you need to start a new vanadium plant? Sunday Mine's not the only vanadium uranium property. There's other properties owned by other companies. There's a lot of it in the area, and some owned by Energy Fuel, some owned by Enfield, some owned by private companies. So, it's an area that there's a lot of resources, produced a lot in the past, and it can, at the right prices, produce a lot in the future, both uranium and vanadium.
I guess it comes back to one of the questions I asked earlier, which was how do you get to the point where you can say, I think we can mine. You said $8 to $9 just now. If vanadium gets to $8 to $9, that could be interesting for you. But how do you get that financed? I mean, what conversations do you need to have with a either investment bank like I was part of, or fund, or whoever, strategic? I mean, what are the options on the table for you, really?
These are some of the customers. The vanadium would finance the thing themselves. I can't give you the details of that. But if there's a shortage of vanadium, and actually, what the ones that cover this industry basically says there's not going to be any new production unless it gets up. It's Nevada vanadium isn't going to come into production anywhere near $8 or $10 or $12. It's high cost, and it's not going to come into production. So, you got Largo in South America. They can step up some production, but you don't. And of course, then the byproduct production of vanadium, from slags and so on. But that's somewhat limited how much more. It's tied to steel production. So again, where are you going to get, even if the demand for vanadium just goes up gradually like it has, without the battery, adding anything to it, there's going to be some shortages of vanadium. Maybe not in the next couple of years, but there's just not new production coming on because the prices aren't high enough. It's not nearly the case as it is with uranium, but vanadium.
So what's the price you think it needs to get to, George? I mean, again, you've got high grade vanadium, which is great, but what price do you think it needs to get to before you can have discussions about even like funding something?
I think we get up into the $9 to $10. It looks very attractive from a plant, the Sunday Mine standpoint. When you look at the grades of the vanadium, and we just, 2 to 3% vanadium, that starts to look pretty attractive at that price.
You think you can make money at that point?
Independent economic analysis and do that if we need to do that. But again, financing may not be dependent on announcing on independent finance. We might be able to do it with the offtake customer. But again, all those things are just possible. They're not in place yet. I don't want to represent that they are.
Yeah.
But again, this is why, we are holding ready for the uranium or vanadium or one or the other to move to a place where the mine makes economic sense.
So I think that's been clear. You are in a position with both uranium and vanadium waiting on price recovery or discovery in the market to get to a certain point. You're suggesting something 60, 65 for uranium, $9 to $10 for vanadium, at which point you will do an economic study on either or both to enable you to get financed. That makes sense. Okay. Thank you. Can we just one last thing, George? One last thing. This kind of got me excited because we've spoken to one other company who's got something similar, and I was trying to understand it, which is used to be called ablation. It's now called kinetic separation technology, which sounds much fancier. Can you tell us what is it and what does it do?
The technology ablation, which we have kind of renamed kinetic separation because that kind of describes it. Ablation is a medical term. The developers or the people that developed this technology called it ablation. When we acquired the technology, we went with that term. But, to better explain it, we just changed the name to kinetic separation. What this is, it's a process for sandstone-hosted minerals, and doesn't mean if it's uranium, vanadium, could be other minerals. They coat the sand, okay? It's a very hard coating, and the way you remove that after you mine it, you put it into a uranium mill and you dissolve it in acid, okay? That dissolves the metals off of the sand. Well, kinetic separation takes this and does it without any chemicals. It does it with kinetic energy. By driving particles of the sand against each other at a very high velocity, it releases that coating. And then what you simply do is you screen off that sand, like you would in a sand and gravel operation. And then the mineral is all contained in the fines, and you basically have clean sand without mineral that you can just leave at the mine site. So what you do, you reduce the amount of material that has to be processed. And the tests that have been done with the machines that we have basically show that you can remove up to 90% of the mass and keep about 95% of the mineral. So what happens, instead of shipping 100 tons to the mill, you take and you mine 100 tons, you'll ship 10 tons for processing. And that's where your savings and the environmental effect comes in, because the worst part of uranium production is the milling. That creates the toxic waste. And mining doesn't create toxic waste because we don't use chemicals in mining, but the mill uses chemicals. And that's why the milling process is expensive and the disposal of the waste from milling is expensive. So kinetic separation will reduce the amount of material you send to the mill. And that's the advantage of it, we think. Well, we've proven it works. Now it's just the issue of getting it into production. And you've read there's issues with it. We ran the process on our commercial machine in Colorado, and of course we had a press release out about this. And then the state of Colorado heard about it. They said, "Well, we don't know what this is all about." So they went through a whole number of public meetings to try to determine if the Department of Health should get involved in licensing this like a uranium mill. Well, after all these hearings, they couldn't decide what it was. So they went to the NRC. And the state of Colorado operates under the NRC rules. It's an agreement state. So they went to the NRC, and there was a staff member at the NRC made a real quick, and as our lawyers say, unfunded or unfounded recommendation. Well, just consider it milling. And that's what the state came back and said, well, I guess it's milling. We think that's a faulty determination by the NRC. We haven't gone back to the state because the state's relying on what the NRC said. So what we've done, it's no secret, we went to the NRC, the commission direct. We've talked to the staff, but we're in front of the commission to decide what this process is. Is it milling or is it mining? And there's a lot of precedent that say things that are done at the mines are mining. This is nothing this is secondary blasting. And our position is if you consider this milling, you better start regulating all mining as milling, because we all blast with dynamite in there. And this is secondary blasting done with basically air. Okay. And so it's an interesting argument, and it's in front of the NRC now. And when they'll make a ruling on it, we don't know. But again, we haven't pressed it because the market right now wouldn't justify it. So as the price goes up, we'll be closer to, I think, going to the NRC and say, we need a decision on this. Well, you know, they take time, but it is in the process. So okay. Right now we're not doing anything, but there's other options. Even if it's determined to need some kind of license, not necessarily a milling license. And I don't need to go into the details of milling versus, but again, even if it's determined that you need a source material license, which is basically to possess the uranium, that's easier to get. But we contend that's not even needed because this is a mining process. It's not a milling process.
You're just saying it's admin. It's just a process you've got to go through. And even if it was a mining license or mining permit required for that, it's just a process you've got to go through and something that you feel you could get. But it's time and it's money, which you're not going to invest now in today's market. But at the right time, you will step in. That's what I'm hearing.
We've already invested quite a bit of money. The legal arguments have already been presented to the NRC, and that paper, a lengthy paper, a technical and a legal paper, has been submitted to the NRC, and it's on their site. You can get it. So we have spent the money through the attorneys in Washington, D.C. and the experts to do it. So it's already, most of the money has been spent on it. So now it's just a matter of the NRC actually taking the action to make a decision. And it takes some time. We've met with them several times, and we'll have follow-up meetings. But we believe it's a decision that doesn't have to be made today, but it should be made within the next year.
So you did say that the ratio there would be like a 10 to 1. If you put in 100 tons of ore, you might get a ton, 10 tons out, right?
We've tested ores, and there's been ore tested not just in our mines, but other ore have been tested extensively on this machine. Ores from Africa, it works on those ores from around the United States. So it's not just for our ores. It could be used around the world to reduce production costs and to reduce the environmental impact of uranium production. And most ores around the world are sandstone-hosted ores.
So has that all been done quite recently, has it?
Yes, in the last year or so. I mean, we haven't tested anything more. We've had samples. We've actually tested some iron ore, interestingly enough, on that process. And that's not uranium, so we can use it. We could test zinc. We had a drum of low-grade iron ore out of Minnesota that we upgraded. Now, again, there's a lot of low-grade iron ore in Minnesota that's not commercial. But again, we did a test on a small quantity. Now, iron ore is a huge quantity of material. Now, whether it's economic for these guys, we tested it to show that this could work on upgrading low-grade iron ore. But again, we tested it on some zinc. It works on other things as long as they're sandstone hosted. But again, we haven't done any uranium testing simply because, it hasn't been necessary, and because we potentially could move the machines out of the state of Colorado. The state of Utah hasn't ruled on what it is, and neither the state of Wyoming. But there's no reason to do that yet. But the machines are in the state of Colorado, so the Colorado said, don't do it until we decide what this is. And now they've decided maybe it's milling, and we're not going to apply for a milling license because we don't agree with that.
So let me get that right. So this machine, this proprietary technology of yours, has been used in the past and tested on sandstone to remove whichever commodities that you were testing for, but not uranium yet, and not anything in Colorado yet. Got it. Understood. Okay, understood. And again, once they make this ruling, is this kind of fairly cheap in terms of how much cost will it add to your process? Or are you going, well, actually, at a 10 to 1 ratio, that's whatever it costs, it's going to be fine?
It's basically run by electricity. It's very small energy cost, and it depends on how many machines are operated by one operator. So it's a couple dollars a ton. It doesn't cost very much. Now, again, the machines that we have, the commercial machine was built to go into a Sunday mine, a small mine. So you'll need multiple machines because it actually goes right into the mine. You can build them bigger. It wouldn't fit into the mine. So if you want to operate outside the mine, you build a bigger one. But the one that we built is the size to go actually into the mine, operate in the mine, and then put the waste material back into the mine. So the cost of operation, if we build a bigger one, would be less because one person can operate a small one or can operate a big one. So labor is one of the major costs, but it's a matter of a few dollars per ton.
And again, I guess you're going to have to work out how many of these machines you would need, where you locate them, and how much ore you can put through them, because that would appear to be, the long pole in the tent, right?
Full Sunday mine in operation, you would need 5 of these. There's 5 mines there. You would need 5 of them because you got 5 different locations, and you put 5 smaller ones, or maybe you would just build one big one and bring the material out. But the advantage, why bring it to the surface if you can process it underground? You just save hauling all that ore out the portals, and you just backfill in the old stopes. Now, if you don't have a mine, if it's a newly developed mine, you don't have anywhere to operate in the mines to start with. So what happens, a Sunday mine has been mined, so it could operate in the Sunday mine easily. But, it could also operate on the surface. And you could either take the waste back in to backfill the mine if you want to do it, a little more cost, or you could dispose of it on the surface. Right. So again, you can build these things any size you want, but this one happens to be built to go in a mine the size of the Sunday mine.
Okay, so this is your proprietary technology, yes?
Patented technology. It's under U.S. patents. We have the rights to that, and it's, of course, protected in countries that honor U.S. patents, Canada, Australia. Yes, and it's proprietary. And not only the technology, but the way you operate this thing. And so that's so important because we've got the only operating machines. I'm not saying it couldn't be duplicated. If we shipped one of these to China, they could probably reverse engineer it and build one. No doubt about it. But the way you operate these things, it's operated by computer technology. And quite frankly, you put this material into this machine, and there's a timing of these things. You've got to leave it in just the right amount of time, or it'll grind that sand to fines. And if you don't leave it in long enough, it won't remove all the. So it's the operational issues also that are proprietary, and we've run it enough so we understand it. I'm not saying somebody couldn't learn that, but it's going to take some time, and we've already done it. We've spent 5 years at this.
Okay. So why aren't you
proprietary, and we're willing to let others use it under license. There are a number of mines we've tested.
Okay. Well, there's the question.
Ready to go because the economics are not there.
But no one's ready to go on uranium. But you said it works for things other than uranium. So are you looking at getting contracts or agreements in place with other miners with other commodities and start monetizing this technology of yours?
Well, I said we tested other minerals. Again,
right.
Case with the iron ore, it's an issue that those are massive quantities, okay, and it would take huge machines to do it, not the ones that we have. And so the economics, and iron ore doesn't sell very much, it goes up and down. So again, nobody's rushing in to say, I got to have this machine because the economics of iron ore go up and down. And some of the other minerals we've tested, it's the same thing. They're small mines. We've tested, from different locations, but nobody right now, the mineral market is not screaming for this because none of the commodities are high enough. They go up and down. But again, you've got to find the right project. Some of the big mines, you'd have to have very big equipment, but smaller mines, maybe it's more economical. These don't cost very much to build a small one.
Right. Okay.
They're pumps and pipes, is basically what this is, and the special patented nozzle design.
So it sounds to me like you're waiting until the market recovers for uranium. You're going to use it on your own project here, and I guess at that point you may or may not receive phone calls from other uranium juniors.
If we use kinetic separation on the Sunday mine, you're going to produce an ore that has probably 30 to 40% vanadium in it, and 2 or 3% uranium. And that is so high grade, if you ship that to an existing processing plant like the White Mesa Mill, they would have to reduce the capacity because the back end of the White Mesa Mill couldn't handle the output. So, there's also the issue of maybe you should build a new processing plant for high grade, really high grade material somewhere. But again, if we've got that high grade material, we don't have to build it in the US. We build it anywhere in the world, because transportation costs for a product of that value are not the constraining issue. You could ship the material anywhere in the world because it's such high value. Once it's upgraded with the economics, if you've got 30 or 40% vanadium and 2 or 3% uranium, that's a lot of value in a ton of rock. But again, I'm not saying the White Mesa Mill couldn't process this stuff. They could adjust the operation to process it. But logically, we'll probably just ship raw ore to the White Mesa Mill, because that's what it does, rather than this high grade that they would probably have to blend down with their low grade stuff anyway to put it through. So again, economically, we're looking at just conventional mining, shipping the conventional ore. Down the road, if when the market comes back, kinetic separation is the way to go. And so that's why, again, we're not pushing this through the NRC, because the decision can wait a while because the market is not there. And again, you would have to have a long-term contract or somebody that's going to put in the money to say, I'm going to build this high-grade recovery plant.
With regards to, just on the money side of things, potentially, you've further said this, potentially it could go on for another couple of years, and you've got hunkering down. You're going to be fine hunkering down. I think you, like a lot of juniors, your share price has been, hit hard the last year. There's not too much you can do about it, is there?
Price goes up and down, and it's based on, I suppose, how the investors are feeling about the market at any one time. We can come out with announcements, but we can't guarantee the price. We can't guarantee there's going to be a contract or production next year. Now that's the problem, and the share prices of virtually everybody have gone down. They've recovered a little bit, but the uranium sector is down. And yeah, I wish I was something I could do about it. I'm a big shareholder of Western. I said on one interview not too long ago, if you want to make money in the uranium industry in the next 30 days, you shouldn't be in this industry. This is a longer term in any company, not just ours. You got to take a longer view of uranium, a year or two. If you invest in this, expect profits, and maybe nice profits with any of the companies, but it's a year or two investment, not 30 days. Real profits are going to be made for the investors that can stay in for a while. And the industry is at a low point, so maybe it's a good time to buy.
I think that's been said by a few. I mean, we've been talking to uranium companies for about a year now, learning about the space. It's quite a opaque space. People have been sitting on the uranium thesis for the last 3 years, and still haven't got it right, but they will be right one day. So it's good. It's fine. But I'm always sort of intrigued by how companies react in a time like this. Today, now it's uranium. It was previously gold, and there's lots of commodities go through their ups and downs. But for you guys, I guess you're cutting back your G&A as much as you can. You're only spending what you need to. That's what you're sort of telling me earlier.
We could cut back a little bit. We've got a lot of claims, a lot of properties. I suppose that's one of our major costs, is holding the properties. We could cut back some of not the key assets, or the ones that certainly wouldn't cut back the Sunday, but we could cut that. We only got 2.5 employees. The rest of the stuff we do with contractors, so that's the thing. We could lay off all 2.5 employees, but you can't do that. The 2.5 employees that we have are the key people, myself, our CFO, Rob, and a part-time operations guy. Okay, to take care of and maintain all this stuff. So our G&A is very, very low. Our capital, our money of holding this company as a public company is high because we have 2 jurisdictions. Our auditors have to audit to the U.S. and the Canadian standards. They have to review our financials quarterly under U.S. law, but Canadian, it's only yearly. We've got additional costs because we're a dual, country, reporting company, and that's a disadvantage. I don't know what we can do about that. I keep talking to our attorneys and our accountants, but again, because we are under the SEC jurisdiction, it costs more, and you'd be surprised of our burn how much is being public company. But we have to. We don't have a choice. I don't know how we can cut that other than become a private company. Theoretically, this company could be taken private by a big cash investor and cash out to shareholders. You know, at the right price, the shareholders are probably willing to do that. But we've got certain costs built into this thing. A little bit we can cut, but a lot of it, the property holding cost and the cost of being a public company are pretty much fixed.
I understand, and I noticed that you did mention it just there. You are a big shareholder. You're sitting on something. There's not that many shares out for a start, but you're sitting on like 30 million. You're sitting on about 4.7, something like that. Is that right?
About almost 5 million shares.
5 million shares. So yeah, you're into this. I mean, was that? Have you been buying in the open market, or is that what you did as part of when you did you're rolling this into the shell originally? I mean, how have you done that? Acquired so much?
I've acquired my shares, you know, when we set up the company. We were a private company when we first set this up.
Okay.
I owned 50% of it to start with. And of course, I've been diluted when we brought in public shareholders and when we made acquisitions like the Black Range acquisition was a share exchange. So, you know, my ownership percentage has gone down, obviously, simply because, you know, we became a public company. You know, we've issued, you know, done private placements, and we bought Black Range in a share transaction.
And so I mean, obviously that's still a big chunk. I mean, 5 million out of 30 is significant. But that's the case of being diluted down from whatever shares you issued yourself originally. Okay, understood. And does that mean do you pay yourself, or do you pay? I mean, I know there's only 2.5 of you. I presumably you take salaries and so forth, don't you? Or do you just do stock options? How do you remunerate yourselves?
Yeah, I've got a few stock options, but now when I get a salary out of the company, that's all public information. Low as anybody in this industry with our resources. You know, again, but you know, I made a interview and I said, anybody else that wants to do this job for the same price that's got the qualifications, have at it.
I'm not stepping forward, no. George, lovely to meet you first of all, and thank you very much for all the time you gave us today. It's very generous of you. I do appreciate that. Best of luck this week. Stay in touch, let us know how you're getting on. Sounds like a lot of moving parts here which need to kind of come together. But be very pleased and excited to hear from you again if you've got the time.
My pleasure.